Resource Watch is brought to you in association with Thebe Investment Corporation.
South Africa and the continent's economy thrives off its resources. Welcome to a new show, Resource Watch, where we look at what's making news in this all-important sector and we speak to the experts. I'm Nozi Pombanjwa. Let's kick off with a look at stories making headlines. Government brokered talks to end the 5-month platinum strike that is battering South Africa's economy collapsed on Monday, with the parties deadlocked. Miners, Anglo American, Impala and Lonmin, the world's top 3 platinum producers, are now reviewing further options. Over 70,000 miners are involved in the longest and costliest industrial action in the mining sector's history. Sasol Mining says its 14 billion rand mine replacement program remains on track, within budget and on schedule. The Sasol subsidiary expects Impumelelo to reach beneficial operation in the first half of next year, while the Shondoni coal mine is expected to be productive later in 2015. And the London Metal Exchange CEO has reported that the global gold price setting benchmark is open to manipulation. The gold and silver fixes, along with other commodity benchmarks, have come under increasing scrutiny by regulators in Europe and the United States since a London interbank offered rate manipulation case last year. And that was the wrap of the week. Let's dig deep. Now, Sibanye Gold is among the world's top 10 gold producers and South Africa's #1. It was created when Goldfields spun out 3 deep-level gold mines in Gauteng and the Free State. It's a major employer with 40,000 people. Sibanye punts itself as a strong dividend payer with strong growth prospects. But the miner is facing potential labor disruptions and controversially is shopping for platinum assets. Neil Fonneman, Chief Executive of Sibanye, joins me now. Neil, lovely to have you on the show. Let's start off by talking about AMCU. They are the majority union on your operations as well. Should they go into a strike, can you afford that strike?
Well, let me just clarify one point. They're only the majority union at one of our operations, being Driefontein. If they embarked upon a strike, I believe it would be illegal. Obviously, the court case still needs to determine the outcome of that. Whether we can sustain a strike is a matter of how we manage it. Certainly, we're in this for the long term. We have strike plans. And I do believe we can sustain a very extended strike. Not that we want to, I don't think it's in anybody's interests.
Not talking about platinum, that's where we've seen the longest and costliest strike thus far. And yet in the same breath, you have indicated some degree of appetite for platinum assets. Why would you go in that direction right now?
Well, we are a proudly South African company. We are South African focused. We believe that South Africa definitely needs a long-term mining champion, and we believe we're the company that has the capacity and we have the appetite and we have the emotion to create such an entity. So we're here for the long term. We are positive about the long-term future of the South African mining industry. We don't see too much opportunity in the gold sector at this stage. We see lots of opportunity in the platinum sector, despite the operational disruptions that have occurred due to the strike. So we remain very bullish about the long-term future of South Africa from a mining perspective.
And of course, to reap optimum benefit, this current strike would have to come to an end. How do you think that could happen, Neil? What should be done now for us to get out of the mess that we're in?
Well, certainly I think the parties remain very far apart, and while they're far apart, processes like mediation or trying to reconcile are not going to lead to solutions or short-term settlements. In my mind, there's a strong case that in the national interest, government should take up a role, declare the strike not in the public interest, illegal, and actually force a settlement. They're the only party in my mind that can do that at this stage.
What then do you make of the minister's decision to walk away from the talks?
Well, I think it's probably an interim step. I would have hoped that government would have taken a stronger leadership role in this circumstance. I think it's very easy for me to sit on the sidelines and make comments like that. I'm not intimately involved, but I do think that there's a strong need for leadership, and I don't think that it can come from AMCU or the mining houses themselves.
Back to your own operations, focus on Burnstone, if we will. What are you doing differently that you believe is going to ensure that you are profitable in this venture?
Well, as we know, it's a venture that failed previously, so we have the school fees, if you want to call it that. We've made it our business to understand the ore body from, let's call it first principles again. It's been remodeled. We think we have a far more accurate model. And then not only that, we're going to start it up using, let's say, a more conventional mining approach. Burnstone originally was started up as a long hole stoping operation. It's very difficult to start up a new mine and trial a new mining method. So we believe we've developed, let's say, low risk plans that will bring it to account.
When Sibanye was spun out of Goldfields, there was the perception that this was the forgotten child and nothing would come of it, and you have completely blown out the light in terms of market performance. What do you think allowed you and your team to bring this performance that we've seen?
Well, first of all, we were given the responsibility to take over really high quality assets. And I think they'd been somewhat forgotten in the turmoil of the 2012 strikes. But certainly, I don't think that anyone within Goldfields or even close to those operations didn't understand the cash generative ability of those assets. To me, it was relatively easy. I inherited a management team that probably felt they would become non-core. They were demoralized. It was easy to re-energize them. We developed a very clear strategy. We implemented a new operating model. And of course, we gave sustainability to our business. And once people realized their future's in their hands, they ran with it. So that all contributed to the success. Your
investors are clearly also very happy, and not only because of that performance, but you're very bullish about being a dividend payer. Let's talk about how you've performed in terms of dividends, and how do you balance that expectation as well as the expectation that internally you're going to be keeping costs down and not going into labor negotiations that might see you back on the back foot?
Well, certainly we've only had 2 opportunities to declare and pay dividends, and on both we've paid very substantial dividends, which is something that doesn't happen often in this industry, and of course it's led to the share price reacting the way it has. We also recognize that if we're going to be competitive internationally, we have to keep doing that. If we don't do that, we're not going to get capital to reinvest in our business. We're not going to have the sustainable life, create jobs for the future, and we've made sure that our employees understand that. So we've never said that wages are not affordable. There are mines where it's not affordable, but we've really taken a view that we want to be here for the long term, so let's make this sustainable. Let's control costs, let's pay proper dividends, let's invest in our communities, in our business, in new projects. Let's buy other South African assets, and that's led to what you see.
Neil, let's get a sense of future plans, prospects for growth, and also your very proactive strategy in terms of making sure that you've got good labor relations on the ground.
Yes, look, I think that as I've said many times in this interview, sustainability is key. Once you get that in place, you start winning the hearts and minds of your employees. If they sense that you're looking after them, it's the same thing. In terms of future prospects, we recognize we have to implement systems like gain share to get more alignment. We have to address the indebtedness of our employees. We have to do much more about housing, and we're busy with those things. We have to do a lot more about the communities. Our vision is quite simple. It's about superior stakeholder creation from a value point of view.
Neil, thank you so much. It's been absolutely fantastic having you on the couch. There you have it. That's the vision for Sibanye Gold, the gold industry, as well as some insights from the platinum sector. That was Neil Froneman, the Chief Executive of Sibanye Gold. Another regular feature of the show is our Gem of the Week, where we bring you an interesting development in the resources and related businesses. Today, we take a look at how 3D printing has become a game changer in jewelry manufacture.
In 1934, talented goldsmith Jack Friedman opened a boutique jewelry store in downtown Johannesburg. The business grew and the trade was passed down the generations. Now, after almost 80 years and with Jack's grandsons Larry and Gavin at the helm, Brown's Jewelers is a company that embraces new technologies equally as much as it does the old flair and craftsmanship of jewelry making. The designs are manufactured overnight using 3D printers and then made into molds. Because they're plastic, they easily melt away, allowing even the most intricate detail to be cast in the metal of choice. Now, these might not look like rings just yet, but this is where the old school skills and craftsmanship come into play, with some modern day help, of course.
What the technology has allowed us to do is to make better jewelry in a shorter period of time. And we haven't lost the craftsmanship. The craftsmen are still very, very necessary. We've just added to all of that.
Each piece requires hours of work, with some known to need several hundred hours of labor to complete. While technology has definitely made the process much faster, and who knows what we might see in future, no machine to date has been able to match the extraordinary level of skills required of master craftsmen.
We certainly can be a lot more creative. We can spend a lot more time, but also work in a lot more detail with the technology. So you can imagine, just to make fine jewelry would have taken a hell of a long time. We can do it a lot better and a lot easier now.
And that's how we end this week's show. Remember that you can talk to us on Twitter, following me at @NoziPumbandra, or using our hashtag ResourceWatch. Until next time, it's goodbye for now.